This is what the pattern traders do. They take a stick, measure it from the top of a double top pattern to the neckline, and they take the stick and they measure it from the bottom of the neckline and see where it hits. It's crazy that this one hits right here around 56K, where there's a big support area on the weekly time frame. Wow, just wow. Let's start off in saying, off the rip, this is where people get their asses handed to them. This is where they get wrecked. This is where they get tricked by market maker and then also foolish YouTubers and Twitter people who don't have their own technical analysis, regurgitated bullcrap. So we're in the middle, obviously, clearly, we're in the middle of a huge resistance, weekly time frame, macro time frames that have shown support and then resistance. So we're in the middle right now, 62K. In my last video where we caught the pump from this fair value gap, I said if we make daily candle closures above 62K, we're most likely going to go test these wicks up here. We didn't get as deep into the order block as I wanted, but we did get pretty deep in there, almost 50% of the way up. I thought we were going to come at least test the 72 area. We didn't make it. But I do think we will be back up to test that area sooner than later. So right now, this middle area, you're in the middle of two macro support and resistance areas. This is where I just personally, I don't like to trade from. So you have to find micro trends and other confluences if you're scalping. You know, if you're an experienced trader, that's what you need to do. If you're not worried about investment, if you're not an investor or a swing trader, you're not DCA into a trade, you're just scalping. If you don't have any big positions from lower time frames up or any short positions from the higher time frames, then this is where you can easily get chopped. And that's the number one reason I'm making this video, is because a lot of people will get chopped up right here. So this is the weekly time frame. We're like in the middle point between support. The bottom of this fair value gap is at 53K area. The top of this order block is at pretty much 72K. We're at 62K right now. Let's drop down to the daily time frame so I can show the type of bounces I'll be looking for. So right here, you can see this consolidation. We have these wicks right here, which was a key area of support and resistance where my cursor is at around 62.4. This was a resistance. Then we had a support. I'm just doing basic support and resistance at this point in time. And price has slowed down as we're even entering this area. Let me slap on the Bollinger Bands. So now we have the Bollinger Bands on, and let me draw another fair value gap that I see on the daily time frame right here. As you notice, this could be a key area where price could bounce at. The bottom of the Bollinger Band can keep on contracting to where it comes up and gets in the 61,356 area. And price was dumping, as you can see, these two daily candles. The second one is forming, but then it started slowing down on the lower time frame. We started getting consolidation. See how we started consolidating on the 15-minute time frame even before we entered, just approaching this support resistance area. There's a lot to gain in this video. You know, as I previously just described, as a support and resistance area on high time frames. And then I also showed how it's a fair value gap on the daily time frame. So we could have a bounce. I don't know how long it's going to take to consolidate. You can see to the left right here in the 60K area to 62. This was a choppy area many times. chop, 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 chop. So we could possibly see price come in here, chop, 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 bounce, back up. And as you can see right here, more consolidation, support and resistance areas to the left. This was a resistance where the cursor's at, or support. This was a resistance where my cursor's at now at 63.4, 63.5. So there's a lot to chew through if you just look to the left where all this consolidation was. Also, we have a fair value gap. We have previous order blocks. So we could see a bounce. This is where people, I want to go back to what I was saying earlier about trying to help people not from getting wrecked, because you see this area of interest is in the middle of these support and resistance zones. So it's hard to know what direction price will go. We could have a bounce, make a lower high, come down, play with it again, make another lower high, fall down. There's so much that could happen right now. Or we could, this could be a go to the bottom of the Bollinger Band, wick down, you just don't know. We could make a higher low and go take out this high. So at this point in time, if you don't have any solid footing in the market, it's just a crazy place to, start wanting to put your foot in the sand. On my previous analysis, my major analysis that I've given in my previous videos, I told people why and where I would start DCAing. My trading team, as well as myself, made plays. I'm going to drop down to the 4-hour time frame. When we were down here at the 53K area, we made plays here. I only scalped longs. After I closed my first position because I was in the storm, I only scalped longs all the way up. And that's why my bias for my videos are only in one direction. I'm not trying to play super trader because it would be too hard to teach people in one video or even 10 videos on how to scalp up and down. Those videos are garbage. You need somebody to teach you that type of stuff. You don't need somebody to sell you an indicator. You don't need anybody to sell you some method. You need somebody to teach you that type of stuff. So we entered plays on the 4-hour time frame. We rode these moves up. And some people are probably wondering why I didn't make a short video. I didn't want to make a short video because my bias was still long until now. Now I see we making a lower low. If daily candles keep closing below here at 63.8, that's a lower low. Then to the left right here at 63.4, that's a lower low. Now we're coming to test this order block, daily time frame. So this is where I could see a bounce from. But if we bounce and make a lower low, anywhere below 70K, I highly suspect that we're going to come down and test our 56K area again. Then if we lose 56K, that 50K, I gave the DCA where I would DCA from. Not financial advice, but I gave the roadmap of my personal areas of interest where I would DCA from on the higher time frames. So that's 2 videos ago, but I'll recap. If we lose all these areas, look on the weekly time frame where all these wicks are at. We have wicks in the fair value gap. We came down, made a lower low and lower high. We're in this area of consolidation on a macro time frame from down here at 53.4 area to consolidating all the way up to 72K almost. So now we have another order block right here that I spoke of in my previous video in the 50K area, where this will be a DCA point. If you didn't drop money at the 56K area, you didn't catch this move up, I wouldn't want to make any major moves until I see that this is what I would want to do for people that are just skeptical about what's going on. I'll just be transparent. We need weekly closes above this 73.9 area. If you don't see weekly closes above here, and this is where the top of the weekly Bollinger Band is, this month we're going down, in my opinion. We're going down back into this order block or this fair value gap. If we lose 50K area, if we bounce, we lose 50K area, we're coming here. And I'm going to slap on my EMAs because my personal trading strategy uses the 50, and the 200 EMA, and also the 20 period moving average of the Bollinger Band. Those are my EMAs that I use for pullbacks. And I told everyone those would be my final DCA attempts to catch this swing back up to busting through this 73K area for our real bull run numbers. So you can go back 2 videos and get that roadmap as well. But I'll just draw it out right here. I'll draw little quick rectangles. Weekly time frame. Here goes another order block. Low point will be at about 40K on the weekly time frame. Not saying we have to go there, but if we lose 50K, that's where I'll be looking for. Let me draw on these EMAs. I almost forgot to draw the EMAs. Okay, so I have the EMAs ready. We have the yellow is the 20 period moving average of the Bollinger Bands. This dark blue is the 50 EMA, and the light blue is the 200 EMA. So my ultimate pullback when I'm trading on time frames is the 50 and the 200 EMA where my cursor is. Now these been pushing up over time. You can see how they've been pushing up. The 50 crossed up, which is bullish. The 20 crossed up a long time ago, which is bullish. So now we have that bullish fan. When I'm on all time frames, I'm always looking for pullbacks. Ultimately, my best ones are between the 50 and the 200. So you see the Bollinger Bands contract as well. That means volatility is increased. And I told my trading team last week that we were going to have some powerful moves. I didn't know if it was going to be a powerful move up or a powerful move down. But volume told the story eventually. And we had decrease in volume as price went up, came back down sharply. So I'm going to get back to the EMA subject. Now, these will keep going up. Anything can happen. We could consolidate for a long time and these keep creeping up. Then we finally hit it, bounce off the 50. You know, I'm not saying what is exactly going to happen at this point, but for me, a pullback would be awesome if I could just get a pullback right here, find some divergences on volume on the macro level, and also some oscillators like the RSI or OBV, stochastic, anything, you know, that'll give us confluence to bounce off of this order block right here. If we did come down to these levels in the 44, 45-ish to 40K area. So I'm not going to go there yet, but this is what everybody in their copy trading mama has drawn. And they've been drawing this now since the first person started drawing it. You notice I don't draw any of these trend lines. Trend lines are meant to be broken. I don't even play games. Volume is my boss. Volume is my boss. I made a video with that thumbnail. Volume is boss. I don't make stupid videos with stupid thumbnails. I make real videos that's going to hit home with you. So the thumbnail should hit home. So right here, if you want to draw what everybody's been drawing, this will be a downtrend. So we'll just use this trend line to show if price were to come down into this area where my cursor is, eventually come down here, keep this downtrend of a lower high and a lower low. This could be where these EMAs start contacting price. If we had a huge wick out of the Bollinger Band, as this happens, the Bollinger Band bands expand, start seeing rejection wicks like we see right here, the rejection wick, and then we bounced up. Look at the top, rejection wick up top. Price never overtook it, came back down. So rejection wicks and Bollinger Band is a huge secret to success on any time frame. But just keeping all that in mind, these are where the EMAs will be. If we lose the 50K area on the higher time frames like daily and weekly, this is where we'll keep going, most likely, and ride this bull run back up. But for right now, in the lower time frames, I'll go back to the daily. Get rid of this trend line. I just want to go back to the daily and show people where, if you're not an experienced trader and you don't have anybody holding your hand, I know you're getting chopped up. I see the people in the Discords and the Telegrams. They're always complaining. They're acting like they're good traders. And next thing you know, they're whining. Then they're acting like they're good traders and they're whining. These guys aren't even trading. They're not trading at all. They're just there to argue, be sideliners, distractions. So I'm telling you, as a professional trader, don't get chopped up in the middle of support down here, which has been an area of support, weekly time frame, fair value gap, and the weekly bearish order block that we've been getting rejected from. If you're not, I'll repeat, if you don't have any skin in the game and you don't know what you're doing, at least wait. This is not financial advice, but at least wait till we either get a rejection off this daily time frame to attempt along. This will be a good place. This order block at the bottom of this order block, or this 200 EMA, this Bollinger Band right here, price touches it, bounces off of it, wicks. You start looking at smaller time frame divergences on any oscillators of volume. By all means, I would recommend playing along. You're not going to make money if you don't trade. But right now, chasing a red candle that could possibly bounce up, or just trying to put your foot in the ground with any major trade, if you're not just DCAing. Like right now, if you DCA from right here and you don't give a fuck, you're on some Michael Saylor stuff, then be on that vindication. Michael Saylor bought here, and well, shut up. Stop talking about it. Why are you even around arguing with people and all that stuff? But if you're trying to be a better trader and you're watching this video, I would recommend to have confluences on the smaller time frames to scalp along, or to try to ride along from this area where the Bollinger Band's at, a fair value gap, the EMA. If you want to try to see if we're going to go back and test these or make a lower high if you're trying to make money. But if you're just, DCAing for the hell of it, just because you're overall bullish on Bitcoin on the long term, then so be it. But I hope this video helped. I'm going to end it right here. I'm going to recap macro resistance, weekly time frame, bearish order block. Then we have this weekly fair value gap that has been called since March. And if we break through those, the next possible stop would be in the 44-ish to 40K area. Hope y'all have a good day. Happy trading. If you ever need help and want to join my trading team, send me a message on Telegram. I always put my Telegram contact details in the description. I don't charge anything. I'm not charging for trading tips or signals. I don't even give signals. I teach you how to make your own setups. So if you're interested in that type of thing, let me know. Peace. Okay. Are we ready for another update? Yes, we are. I'll answer for you. I'm making this video so I can help people from getting wrecked like they usually do. Stop listening to these guys on YouTube who have something to sell other than just trading. I make my money by trading. I don't sell anything. So I'm coming out the gate telling you I live this life. I've showed you I've lived this life in my previous videos. I've showed entries on charts. I've gave 100% range accuracy using fair value gaps. And I'm not saying this to toot my own horn, but I would just like to say that I really get joy from helping people become better traders, and then helping other people not continuously losing money by listening to others who really aren't good traders, who claim to be technical analysis, but they don't actually live the trader lifestyle. All they do is copy other TA from other YouTubers and other Twitter people. So it's all regurgitated mess, trash. You can see the thumbnail pictures, up and down faces, whatever it may be, just silliness. Guys are changing their macro outlook in like a day's time. So people that are new to TA and that aren't good traders can't spot this, because you have to be able to change your analysis, change your perspective, and roll with the punches in trading. That's true. But I would like to say a macro analysis should not be changed in one day's time, unless you had some huge 40% dump and there was some candle wick or some other type of evidence. But these guys are making macro direction changes every other day. We get a 4-hour green candle and these guys are saying we're going to the moon. They start making these 100K predictions. So let's just cut all that out.